Hey Rebels, welcome back to the channel. Today we're going to talk about price predictions because everybody in crypto wants to know what the price of their token is going to be. That way they can just hop on YouTube. They're going to have a YouTuber tell them what price their token is going to go to. They know when to buy, when to sell, and that's going to be their whole investment thesis. And you're going to get wrecked doing that basically because what ends up happening is, I've been around since basically the bear market lows, and price predictions at that time were conservatively $150,000. That seemed to be like a pretty good consensus. $150,000, you heard that a lot. And then as price went up to $70,000, then the price predictions went up to $250,000. You heard that a lot. Now that we're up at $100,000, you're absolutely 250,000 is like the base case now, whereas at the very beginning 150 was the base case. So there's really no confluence between price predictions across any platforms. You have Bloomberg saying one thing, and you have YouTube influencers saying another. You have Cathie Woods saying another. So there's really no confluence between these price predictions. And there's a lot that go into these price predictions, fundamentals, projections, this and that, but none of them ever seem to line up. And maybe you can get some confluence between a few price targets, but it's everybody's just best guess, right? So what if we could have a mechanical way to project price targets, or what if we had a mechanical way to project price targets to give us some kind of lead on where price could go? Because when price is in price discovery, we have no idea where the price can go. And so people end up using these different Fibonacci retracement tools to give us an idea where those levels might be. That kind of ends up being a self-fulfilling prophecy. So then you do end up seeing support and or resistance at those levels. And then when it breaks through, now that you've created that level, you have potentially support coming down from the top side. So anyway, let's just dive right in. There's a couple things that I want to begin with, a couple patterns, how to project price from patterns, and how people will end up doing this. So this is a cup and handle pattern here. That is a bullish sign, bullish pattern, excuse me. And so what you do is you draw a line from the bottom up here to this, I'll call it a neckline, and then you project it out from the breakout zone, right? So that gets you up to $132,000. So why don't I just come over here and I'll just $132,000. That seems to be a reasonable price based on this technical pattern that the price could go. Now, some people will use this on the logarithmic scale, because essentially what this does is it puts all the price history on a scale where you can see all of it. Before, if you were paying attention, all of this was relatively flat because this is way down here at like $5,000, and we're up at $100,000. This just gives us an idea of what the price was doing on one scale. So the other thing I want to warn about patterns is you can sometimes see bullish and bearish patterns. This is somewhat of a tangent, but it is relevant because a lot of times we use these patterns to predict where the price could go in the future. And this is everybody's calling for higher prices, and there's this ascending wedge, which is a bearish pattern. Ascending wedges are typically bearish, and it's kind of just glaring you right in the face. I don't believe, I have a bullish bias right now because we're in a bull market, and I haven't seen any macro indicators to suggest that we are rolling over or that we're top heavy right now. So I imagine I am on the bias of I'm a bull. I predict that we're going to see higher prices just based on my own analysis. But it is funny how it's a cautionary tale, because there are bullish and bearish signs in the market, and you can very easily decide which ones you want to believe in. I of course want prices to go higher because that's going to make me more money. So I have to be very careful on my own biases in that. So I just wanted to point that out very quickly as we're looking at it, as we're talking about these bullish patterns. There's also this ascending wedge in play that could potentially be a bearish signal. So anyway, just food for thought, something to keep in mind. And I'll put this back on our regular scale, and we can kind of keep marching on. So the first tool that I'm going to talk about here is the Fibonacci retracement tool. Now, you can do these other projections actually quickly on other patterns. So another pattern I'm noticing on here, sorry, I forgot to mention this one, is a reverse head and shoulders. And I'll just kind of outline that here. This is also typically a bullish pattern. Okay, you have your shoulders here, and you have your head right there, and then that would be your neckline. So again, you can go here from the bottom up to the neckline, and then put that where it's projected. Now there's lots of different patterns. There's bull pennants and all the rest of it. You have other ways to project those. I'm just going to do these two that I see right here on the charts and just mark them up just because they're the most relevant that I see right now, at least here in the short term. Let me pull this back down here. Yeah, so that's basically just another example of how you would project a pattern there, right? So that's a reverse head and shoulders. That got us up to like $150,000, which is actually really interesting because 150,000 is a pretty psychological level. That's something else you have to keep in mind when you're assessing where the markets could possibly go. Like 100,000 is a very strong psychological level, which is probably one of the reasons why we've been hovering around $100,000 for quite some time. So now we will get into the Fibonacci trend-based Fibonacci tool. So what I could do is I go over here, click on the trend-based Fibonacci tool, and let's just start from the beginning of the bull market to see how this could have potentially given us an idea of where price could go. So what I've done here with this tool is I've just gone into the settings and I have basically 1, 1.5, 0.5, 1 and 2 and 2.5. And basically what this is saying is that this move right here projected off of this low, this would be 50% of that move. 1 would be 100% of that move. 1.5 would be 150% of that move. 2 would be 200% of that move, and so on. So these are basically significant levels that you can expect to see potential resistance, right? And so you can see it cleanly broke through the 100% level and found support there. It was likely that we were going to go and test the next level, which is the 150% level, which just so happened to coincide with this old support or this old resistance line right here. So seeing confluence between trend lines, support lines, and this tool can give you an indication that this is likely to be an area that you're going to see some kind of market action. So that actually played out to a T. And then in fact, we did come back down and see some support on this 200% level. So moving on in the bull market as we go, if we wanted to project, these levels here, let's go just kind of go to the next level and see how did that do, right? You can see that we definitely got some resistance on the 100% level here quite a bit. And we blasted through the 150%, indicating that it was likely that we could go up to the 200% level. And that's exactly what we did. Now, talking about confluence, let's just go back and draw this trend line that I've had on the charts for a very long time from the 2017 peak to the 2001 peak. So this is what I was talking about, and this is what I have in the thumbnail here. This definitely called this zone right here. Absolutely nailed it, almost to perfection, to where everybody during this time was calling for higher prices. It was a very exciting time. We had the inauguration. It's a crypto-friendly regime, and it's all over. We're just going to see higher and higher prices from here. But we had this mocked up on the chart way ahead of time, and so we had this giant run up. And it was just hitting resistance very clearly here in confluence with this 200% level. Did it go higher? Yes, very briefly, right? But it closed beneath it, right? Which was a sign of weakness. And then, of course, we came back down to retest. We had one more crack at it and hit the resistance line again, closed beneath that. And then, of course, that's when we got our correction, right? So that's one way to use this tool is to give you an idea of where potentially these prices can go and where you might, and then of course, we do have these old resistance levels as well up and down. So you kind of just get confluence between those and see where is it likely to react, right? Let's draw a couple more of these just because we can, kind of larger macro areas, and we'll just kind of see, right? So that's 135. So we're starting to get kind of some confluence in the 130s area. Let's try another one. Why don't we try like from this was a pretty significant point right here. You could also project that just because starting to get a little confluence between the 200% area, the high 148 to 150. Might as well mock that up a little bit just because we can. Not seeing as much confluence with any of these other areas. So maybe they don't all line up. It's not like a magic wand. But why don't we do from this low to this high, project that out. Let's see what we got here. That's very interesting. Getting a lot of confluence in this 130 area. Let me mark that one up. Okay, why don't we go shorter term just for fun? Mock that up, see if we have any confluence there. Interestingly enough, we do. We have lots of confluence right here in this 135 zone, right? You can see a lot of confluence. So that's kind of what I like to do is stack these up, and then when and if and when price breaks through, well, I would expect that this zone right here is a high probability of meeting resistance. Another thing that I actually did beforehand that's good to do. This is why it's really good to start measuring, just going into the charts and measuring yourself, right? So from the low to the high, we had a $58,000 move, depending on how zoomed in you get, 59, 58,000, something like that. Okay, well, let's just bring that up and see what it did low to the high. Okay, basically right on the nuts. Let's bring this up to the top of that right there, $60,000. So funny enough, from the lows to the highs, it did a $60,000 move just like clockwork. Well, what happens if we do? Why stands to reason that we could potentially do a $60,000 move again. What does that do? Well, that would be a regular move for Bitcoin, just the same as it has done this cycle, gets you right into that 130 zone. Does that mean that's where the cycle ends? No, but I could imagine that that's probably where you're going to meet a lot of resistance, right? So this is a very, very unique tool to go through and find areas of confluence. So as you're going into price discovery, just get an idea of where you might see some market action. So now I'll go back into the SUI chart and just kind of do the same thing here, and we'll get into a different tool that I like, but just to see how this could have potentially helped us out earlier in the cycle as we were going along here. So we would have projected this already, we would have cleanly broke through, and so we would have been targeting the next area, and sure enough, we actually broke through pretty cleanly. Didn't quite make it to the 200%, but we did come back down to test this area, and we had some wicks. This is on a weekly chart, and closes above, indicating that, well, there was a potential for a push higher. That's exactly what we got. We got a push up. We closed beneath, but then the next week we had this huge wick and closed above. Again, huge wick, closed above. So it was showing signs that it wanted to keep going. We did have one close below, but then of course we ended up hitting that 250% level there, right? And so just having this tool ahead of time would have given us some ideas of areas, and following it along in that fashion as it breaks out, where are the closes, giving you signs of strength and weakness. And we ended up getting a full 250% repeat of this move right here projected from that low, which incidentally was a higher low, which was an early indication that prices could potentially go higher, right? Because we were forming a macro higher low. Let's see now. Oh, the other thing too that we could have mocked up on here is if we just drew from that high to that high right there. Isn't that interesting how this trend line also ended up being the support line as we were coming back down to retest? So you had more confluence that we were getting support here, potentially gearing us up for a move higher. Okay. Now we're going to go to the other tool that I have, which is the Fibonacci retracement tool. This is very, very common, and I use this all the time on the channel to do various projections. I usually use the 50% tool, that is what I call it, which is just 0, 0.5, and 1. And then I use that to give me an idea of strength or weakness in the market. Anything in the strong half is, of course, strong. Down into the weak zone, that would be considered weak, right? And then you can use this tool to gauge, as we broke down and retested it, and then we had a failure there, we understood we were going to probably see lower prices. That's what we saw. We formed a higher low, and then we used that 50% tool again over breaking cleanly through it, showing signs of strength. Anyway, I digress. That's what I usually use the 50% tool, or the Fibonacci retracement tool, is for that 50% tool. The other thing I have is this standard projection where I've used specific Fibonacci numbers, which I even forget what they are. This is the 1.618, 2.618, 3.618, and 4.236. Anyhow, these are just significant levels, and as you can see up here, we also had confluence with the projection that we just did and the 2.618 level here. And you can kind of see how they interact with these zones as well. We broke cleanly through. Perhaps we're going to target the next one. We did. And that's where it ended there. So way ahead of time, before we had any of this price data on the right, we had ideas of where the market could potentially go. And a lot of people project these same projections. So a lot of people will wait until we get to these zones before they sell, right? Now you can go ahead and test this on any other markets, and maybe you want to, for the next leg, you want to project this from the low to the high, and you just go through in that manner and see if there's different areas of confluence to give yourself an idea of where the price may go. Now, I've done some of this before, and in a strong market, there's lots of ranges early on in the bull market where they absolutely can get up to these levels, but that's something that you have to do for yourself. Go back through, and instead of changing your own price targets as the bull market continues, if you have these levels beforehand, you watch how they interact with them, and you get your own idea of whether or not it's going to be probable to target the next zone for yourself. So that means you don't have to rely on YouTubers. You don't have to rely on me or anybody. You can go and use this mechanical tool yourself and go and back test. I mean, nobody likes to hear that, but it's gonna serve you a lot better than going on YouTube and confirming your own bias and listening to somebody tell you that XRP is going to $1,000 or whatever the hell it is. I mean, I'm just making this up, but I mean, so are they, right? They want to farm your attention, and so that's what they're there to do. And price prediction videos are very hypey, and they get a lot of attention. And I wanted to make a video where, well, if you're curious about where the price can go, this is what a lot of people do. They'll use this Fibonacci retracement tool, and when you're in price discovery, people who've been in the markets and trading a lot, they'll just use these levels as potential areas to sell. And then that kind of becomes a self-fulfilling prophecy, and that's what ends up happening. So why don't I go ahead and I'm going to change this tool back to my 50% tool. But I also wanted to show you quickly how many different levels there are as well. I mean, you can just see how many different levels there are. I mean, how crazy do you want to get? You could use them all, I suppose. But I mean, which would you prefer? I mean, what we've been doing, or do you want to trade this? Now, maybe you want to trade this. I don't particularly want to have 100 support and resistance lines. It just makes my eyes twitch, and I just I can't make any sense out of that. It's not very clean. It's not very. Now there are certain levels that have higher probabilities of working out, and I suggest, why not? You can go through the rabbit hole of Fibonacci retracements, and you can find out maybe that's something that you prefer, right? I just wanted to kind of give a different spin on it. The levels that I've chosen there, on the 100%, the 150%, 200%, those are significant levels based on the trend that you will find potential support and resistance. And you can go through and you can put all these lines on your chart, and maybe you can make your own strategies. I mean, I'm not here to talk bad on it, but my own preferences, it's not very helpful to me, right? But you can see, even just looking at this, how they do interact with these different levels. Okay, so that is an option that you can do. Feel free to backtest markets yourself. But I'm just gonna kind of end it on this note on this whole rally up. First of all, we did just have this big cup and handle pattern. So you mock these things up on the charts ahead of time, and while this was falling, everybody was absolutely freaking out. But we could just see that, well, it seems like we're most likely just retesting this cup and handle pattern. It's very normal. Once hindsight makes everything so clear. At the time, this was very scary. And at the time, it seemed like prices were going to go on forever. But if you just zoom out, get yourself on a weekly chart and start playing around with some of these tools, you'll just it just starts to paint a clear picture, right? Everybody was expecting higher prices here, but we had a lot of confluence with our projection tools and this trend line telling us, and we had this huge run up, and it was just a measured move, $60,000 move. All these things kind of lining up, telling us, well, I don't know. I'm not sure that prices are bound to go higher right away, right? And sure as shit, that was back in November. We had this peak. We're pushing July here, and we're right at the same price, right? So I would suggest that you go into these markets, start measuring for yourself, start learning some of these different tools, follow along for sure. Like and subscribe. This is kind of what I do all the time, every day. I like doing this. So, um, it's just something that you kind of go into every day, and you start measuring things out, and you get a picture yourself on, what's likely to happen. So, for me, I am anticipating prices going higher. And so if that's the case, where might I expect some support and resistance? Oh, excuse me. Let me just draw this out a little farther. And just as a hypothetical, just for fun, because it is fun to, you know, uh, it's fun to guess where the markets could go, or how maybe they could, how maybe they can, they can move or something, right? So, or speculate. Yeah, it's fun to speculate, right? So it's just really what I'm saying is, like, how's the market going to move? I have no idea. But if it breaks out of this trend line, I mean, this has been an all-time trend line. Bitcoin has never broken this trend line. If it breaks this trend line, I think we're in for a serious move. I mean, things are looking quite bullish right now. And if that does happen, where everybody's gonna, again, when this busts out, people are going to be calling for 150. And then when it doesn't get there and it pulls back, they're going to be freaking the fuck out, like, oh God, it's over. I missed it. Maybe we just get support on this trend line and then we go higher. We'll just have to see what the market does, what the market tells us at this area. If it breaks cleanly through, well, we can start doing some other projections. There were other projections absolutely getting up to these higher ranges, into the higher, even into the $200,000 range, right? So I'm going to leave it on that. Just do your own research. Don't listen to me. Don't listen to anybody else. Go through yourself and see how these things work, and it'll actually amaze you truly, how symmetrical markets seem to be, and how these types of patterns and how these tools work very well to give you some confluence, and then from there formalize your own trading strategy based on what you are seeing in the charts, not from what I'm telling you, not from what other YouTubers are telling you. Just do it for yourself, and you're going to have a much better time. Take what you've learned from all these people that you admire and that you're learning from, and formulate your own plan. Because I'm telling you, you're going to waste a lot of time watching so many different YouTube channels trying to, oh, I want to buy here and sell here. Like, nobody can actually tell you. Just go through the charts, do the homework yourself, and you'll be so much better off. Okay. I'm just going to leave you with that. Take care, guys.